I'm sure by now you heard My Forex Funds had their bank accounts frozen. But in this video, instead of talking about doom and gloom or speculate about why it happened, I want to give you 10 practical suggestions about where to go from here, as well as look at 7 prop firms that may be better options. I want to start by telling you a story because I know exactly how it feels. I went through a similar experience in the poker world 12 years ago when, without warning and no fault of my own, I had multiple of my accounts frozen. But let me take you all the way back to 2003, start of the online poker boom. There was a guy by the name of Chris Moneymaker. Yes, that's actually his real name. Regular guy who bought into an $86 online poker satellite tournament. Ended up winning that tournament, and his prize was a $10,000 entry into the World Series main event.
This could be the last card of the 2003 World Series of Poker.
It's a 5! Yeah!
Cashed in $2.5 million. As you can imagine, online poker exploded after that as everyone was chasing the easy money. Now let's fast forward to April of 2011. First 2 weeks of the month, I'm up $8,000 to $12,000 and I have probably $35,000 to $40,000 online. I woke up on April 15th, 2011 to news that absolutely rocked my world. The Department of Justice froze the largest 3 poker sites, Full Tilt, PokerStars, and Absolute Poker. Of all the money I had online, PokerStars paid out the fastest. Took about 3 months, but I got my full refund of about $10,000. Had about $12,000 on Full Tilt, and I remember waiting over a year to be paid. But of all the remaining money, thousands of dollars, I never saw a penny of it. I'll circle back to 10 life lessons at the end of the video, but what I want to do now is go over various prop firms and mainly focus on where their business is registered. I'd be naive to think that the US and Canadian governments will stop with My Forex Funds if they can reach out and touch other companies. It's just my opinion, and take it for what it's worth. But for now, I prefer not to trade with companies registered in the US or Canada. There are dozens of prop firms with more popping up every day. Some of the lesser known firms have awful rules, like 4% relative drawdown, and I didn't even bother reaching out to them because I wouldn't recommend them anyways. Of the ones I did contact, some responded and some didn't. If there's a firm that you're curious about that I don't mention, let me know in the comments below. Now, I want to go over 7 reputable prop firms. 4 fall within the US and Canada, and 3 are registered abroad. I'll give you the information, but it's up to you to make up your own mind. Let's start out with good companies, but ones that I may steer clear of for the time being. First up is Surge Trader. Normally a good company, but you should be aware they're registered in Naples, Florida. For the funded trader, you can see they're registered in Texas. Skilled Funded Traders, a newer company with an interesting podcast you should check out. If it's important to you, they're also registered in Florida. And last but not least is Lark Funding. They emailed me and confirmed they're registered in Montreal, Canada. Surge Trader, the Funded Trader, Skilled Funded Trader, and Lark Funding. All good companies, but would I be in a rush to sign up with them? Not necessarily. Let's go over 3 options that may be a better replacement. I've made several videos about FTMO already. Click up here for my FTMO playlist where I'll go over some rules you may not be aware of. They're registered in Prague and are one of the OGs in the industry with a solid payout history. Customer support and spreads are top notch, but the profit targets and pricing tend to be higher than others, but I feel it's a small price to pay. Keep in the back of your mind, if this foolishness spreads to Europe and those regulators look for cash grab, I wouldn't be surprised if FTMO is their first target. So let's look at two more options you may want to consider. Bespoke is based in the UK. I have a link down below for Bespoke Funding you should check out. A few things I like about them. Number one, they were on board with a no time limit long before FTMO was. During the challenge phases, they automatically close your position for you when you hit your profit target. No more biting your nails as you watch every tick of the chart. Or worse yet, you actually hit the profit target, but price retraces a little, and then you have to take another trade and hope you pass. As soon as you pass stage 1, you instantly receive your credentials for stage 2 logins. No more waiting days for the administrative people to do their job. Some companies have a bunch of fine print and try to keep all the money for themselves if you violate a rule. With Bespoke Funding, if you breach the account rules but are in profit, you're still entitled to whatever profits you've generated up to that point. Account parameters are good, 8 and 5% profit targets, max daily loss of 5% and max loss of 10% overall. They have a generous scaling plan where you can increase your account by 40% after only 4 months. I'd say they're a very good option. Click the link in the description to get more info. Now let's look at the last company. Blue Guardian is based in England and is another prop firm you may want to consider. I've got a link for you in the description below. Blue Guardian's phase 2 profit is only 4% compared to Bespoke's 5%. We just saw Bespoke offer a max loss of 10% and a daily loss of 5%. With Blue Guardian, you can only lose 8% total and only a max of 4% in a day. So Blue Guardian's challenge is easier to pass, but it's also easier to lose your account. Bespoke's profit split starts at 80%, while Blue Guardian's is at 85%. Similar to Bespoke, support is top-notch. I've chatted with Blue Guardian over Discord. Perhaps their claim to fame is their Guardian Protector feature. They can automatically protect your account and limit the amount you can lose in a day to make sure you don't hit your daily limit and lose your account. Check out the links in the description below. Now, I want to share with you 10 life lessons that I learned from my poker days that are directly related to trading prop accounts. Number 1 is have a safety net. What would happen if I were a professional poker player but had all of my net worth tied up online and rent was due in 2 weeks? It would be a mess. I played poker at night and went to the office during the day. It might take some time, but build an emergency fund. Sell some stuff on eBay, drive for Uber, pick up an extra shift at work. Do whatever you have to, but have at a minimum 1 month's expenses saved up. I typically have anywhere from 6 to 12 months of expenses in cash, separate from a 401k or Roth IRA, dedicated to emergencies. Number 2 is don't be so quick to quit your day job and become a full-time trader. Say you had a great month. You made $10,000 trading in your spare time while you slave all day at a job you hate, only to bring home $3,000. The allure of freedom that trading can bring is tempting. You might think to yourself, I made $10,000 trading part-time. My job is sucking the life out of me. Plus, if I trade double the time, I'll make double the money. Trading is 100% commission. It's strictly an eat what you kill type of proposition, very similar to playing poker. There were days I'd be up $1,500, but give it all back plus some. When it comes to trading or playing poker, you can sit there for 8 hours, do your very best, but still end up losing money. It's not like going to the job. You punch your time card and you get a guaranteed paycheck. You have to be okay with that. Number 3 is try to find ways to balance both a job and trading. When I was playing online poker, the juiciest games were always at night and on the weekends. Oftentimes, I chose not to go out on a Friday or Saturday in order to be in front of the computer. What does this mean for trading? Forex is a 24-hour market. The New York session starts to heat up around 8 in the morning. Let's say you live in California. Are you willing to hit the charts at 5 in the morning before work? Or let's say you're a night owl. London Open happens probably around 11 or 12 o'clock at night in California. My point is, when there's a will, there's a way. I think ultimately trading full-time is the best option, but until then, it doesn't have to be all or nothing. Number 4 is take payouts as soon as you can. With poker, there are no prop firms. It's essentially like trading a personal account. If I wanted to play higher stakes, I had to keep more money online. But it's not like that with trading. Most firms you can withdraw every couple weeks. Now, there are prop firms where you have a relative drawdown. You're forced to keep some of your own profit in the account to give you a buffer. I'd stay away from those companies. Number 5 is take advantage of free rolls. Make sure you get your refund. There's a term in poker called a free roll. It's used in 2 different ways. The first is when both players are all in. They essentially have the same hand, but one player has a little something extra. So here, for example, 2 people are all in. Both players have pocket kings, but as the cards come out, one player also has a flush draw with 4 hearts. 36% of the time, he wins the whole pot if another heart comes, and 64% of the time, he and the other player split the pot. There's no way he loses money here. The other free roll is when you have a free entry into a poker tournament. It doesn't cost you anything, but you have the potential upside. When it comes to prop firms, let's say you pay $500 for a 100K challenge. You pass and you get your $500 refund. Essentially, you're on a free roll at that point, playing with the casino's money. But there's a dark side to refunds the prop firms don't want you to know about. 19% for phase 1 and 42% for phase 2. This is actually only half the story though. In order to get a refund and payout, you have to be profitable after 30 days without breaking any rules. Here we see of those traders who passed phase 1 and 2, only 40% did everything right and lasted long enough to actually receive the payout. Can you imagine going through the stress of passing stages 1 and 2 only to mess up at the very end? What happens is many people think getting funded is the goal. No, that's only step 1. They may get overconfident or greedy and take on too much risk. They violate the daily drawdown, and not only do they not make any profit, but they don't get their refund either. Once you get funded, I'd recommend being ultra conservative. Take a few trades at 0.5% risk, show a profit, and then request a refund. Once you have that money in your account, then you can scale up and try to maximize your earnings. Number 6 is another poker term that's migrated over to trading. Avoid tilt. When a poker player goes on tilt after losing, he's angry, he's frustrated, he's being irrational. I've seen players bust and they keep reloading. It's the same with trading. You lose a trade and it's so easy to want to jump right back in, maybe even doubling your size, trying to get back to even. We all know how that turns out. Number 7 is to think in terms of probabilities, not absolutes. Beginner poker players often confuse luck with skill. They did something stupid, but hit their miracle card. They won the pot, so they think they did something right. On the other side of the coin, the poker pro did everything he was supposed to do, but ended up losing. You have to look beyond that one poker hand and think about what would happen in the long run. With my poker background coming over to trading, it was very easy for me to grasp the concept of reward to risk. I don't need a system that has 70% win rate. In fact, with a 2-to-1, I can make a lot of money, even if I only win 40% of the time. So for example, I take the same trade 100 times, I'm getting 2-to-1 and have a 40% win rate. I win 40 times for plus 80R, lose 60 times at negative 60R, and overall I'm up 20R. Think about that for a second. I lost 50% more, but still made money. Going back to poker, it's a situation that's second nature. Let's say the pot's $500 and he shoves for his last $50. Even if he turns over his hand and shows me pocket aces, I know I'm only winning 20%, but this is the easiest call in the world. 20% of the time I win $550, 80% of the time I lose $50, so overall I'm looking to make $70. If this same hand played out 100 times, I'd be up about $7,000. Whether it's trading or playing poker, take good trades with a high risk to reward ratio. Your next trade could be a winner or a loser. It doesn't really matter. Think in terms of the long run. I've posted backtesting videos of the super trend indicator and various Ichimoku strategies that might only win 35% of the time, but make a lot of money. Tomorrow's price is either going up or down. You can flip a coin, close your eyes, heads, click the buy button, but just because you made money doesn't mean it was a good trade. Or you can plan everything out, see the perfect setup, but the market comes and takes your stop loss. That doesn't mean it was a bad trade. Number 8 is to mind the gap between plan and execution. And number 9 is have the patience to see it through. Let's say you've back tested your strategy and you've proven to yourself that it's a long-term winner. What happens when you take 3 or 4 losses in a row? If you're like most people, you want to monkey with the rules or you just completely throw it away. It happens all the time in poker. A guy is down for the night and instead of being patient and waiting for good cards, he's just chasing after everything. In poker, there's a forced bet before you're dealt cards in the form of a blind or an ante. Even before you see your cards, you have to put money in the pot. So if you decide tonight, I'm gonna fold everything, not play a single hand, you're guaranteed to automatically lose all of your money. The true beauty of trading is there's no ante or forced bet. Prop firms have no time limit. So if you don't see your ace set up today, you can let everything pass you by. If tomorrow you don't like what you see on the charts, you're not forced to do anything. You can take one trade a week if that's really what you want to do. What most poker players and traders have is not so much a strategy problem. It's more of a discipline and risk management issue. And last but not least is diversification. I had multiple poker accounts. Some sites had better software, others had better bonuses or easier players. At the end, I got refunds from 2 of the companies. The others, I got the shaft. I spread my playing around. When all was said and done, I made more than I lost. Some prop firms have better reputation. Some are based in America, some are overseas. Some have targets of 8%, others are 10%. Some have a fixed drawdown, others are relative. Keep an open mind and consider multiple options. You'll probably find one that's right for you. However you want to look at it, the upsides of prop firms far outweigh the potential risks. I still think they're a better bet than fully funding your own personal account. Check out the links in the description for prop firm recommendations. Let me know in the comments your thoughts about where the industry is headed or what you're planning to do about it. It's common knowledge that most poker players end up losing money, either to the fees or to the better players. It's no different when it comes to trading. Whether it's a personal account or a funded challenge, 90% of traders end up losing money. When it comes right down to it, the two major reasons I've alluded to are psychology and risk management. I have a playlist that touches on both of these topics. Click here and do yourself a favor of building a strong trading foundation. Thanks for subscribing, and I'll talk to you soon.